Chapter 1 is kind of just an introduction to management accounting and what it means. You can see there's several objectives for the chapter, very kind of basic information about what management accounting is, and for those of you who've taken undergraduate accounting, how this is different than financial accounting. So you can see what the objectives are right there. And for this class is cost accounting, and you can see that the top there it says financial accounting versus cost management and systems framework. And so financial accounting on the bottom here deals, it says two major systems, financial accounting information system, cost management accounting information system, and the difference is the targeted user. So for financial accounting, it's more about external reporting and providing information to investors and creditors. For management accounting, the user is primarily management and owners of the business. And what information do they need to make good decisions about the business? The top here it says accounting information systems. Accounting informations consists of integrated manual computer parts, uses processes such as collecting, recording, summarizing, analyzing, and managing data to transform information to the users. So just think of accounting in general and just think of what we're trying to accomplish. And if you think about transactions, if you think about a business going about doing its daily business of buying goods and services from vendors, selling goods and services to customers, paying your bills, all those various things that a business does, it's all about collecting that data, recording it, summarizing it, and analyzing it into information. And so information can be categorized into financial accounting, which is reporting to external users, or management accounting, which is reporting to internal users. So financial accounting, external users, and we follow certain rules. It says rules and conventions set by the SEC, which is the Securities and Exchange Commission, and the FASB, which is the Financial Accounting Standards Board. And that basically produces what we call the GAAP results, GAAP accounting. And GAAP stands for Generally Accepted Accounting Principles, basically the rules that have to be followed when financial statements are prepared, so that they're prepared consistently. No matter what company you're looking at, you know that the accounting rules that went into producing the financial statements are consistently used no matter what the company is. Cost accounting, which is what we're talking about, is about providing information to internal users. And that information can be categorized into three broad categories. And you can see here cost services, products or other objects, planning and control, or decision making. And the criterion formats is really up to the company. With financial statements, you have a prescribed format. A financial statement needs to look a certain way. You have to include certain disclosures. There's accounting rules about how you come up with the numbers for financial accounting. For cost management, it's really up to the user. It's up to that business and the users of that information, how they want to slice and dice the data and take a look at it. But just know that there's three broad categories here. Is we can take costs and allocate them to services, products, or objects. We can use cost management information for planning and control. Think about budgeting and making strategy decisions, which is the last one. So obviously, different systems would have to exist for different purposes. And so a cost accounting system assigns costs to individual products and services. So basically, what does it cost us to deliver our product, to deliver our service to our customers, and how do we price it accordingly? It's definitely used to help with external reporting, so that's a part of it too. But it's very different systems for different purposes. So just know that we've got cost accounting on the management reporting side, and we've got financial accounting, which has to conform with certain specific rules. So just some things that affect cost management in general. So just think in general, this class will deal with How do costs behave? What are cost behaviors? How do we allocate costs? How do we do budgeting? We'll look at cost, volume, profit. We'll look at activity-based accounting. We'll look at manufacturing accounting, accounting for a service company. But basically, costs behave a certain way. And then the factors, affecting cost management include competition. Obviously, in general, just think that we as consumers expect higher quality goods at a lower cost over time. It's kind of what we expect to receive, right? Because global competition and the competition for our dollar is so intense that really we don't live in a U.S. economy as much as we live in an international economy. And so that competition and that increased competition from foreign companies or just companies that are based in the U.S. but have a global component. So that increase in demand really requires a good, accurate cost information system so that we can price our goods accordingly. We can know exactly how much it costs to make our product and so on. At the same time, the service industry is also growing. And so, especially in the U.S., with deregulation with some industries and us becoming more of a service-based economy, those things are driving the growth of the service industries. And so obviously cost management needs to follow along with that. Obviously technology plays a very large part in cost management. With anything in accounting nowadays, technology has become a very big deal. So obviously computerized accounting systems, computerized cost management systems. It says here the integration of manufacturing with marketing and accounting data. And of course you've got some really big software companies that are global that produce systems called ERP, which stands for Enterprise Resource Planning, which integrates all these different facets of a company into one software system. Of course, we also have e-commerce, which has become obviously a huge industry, and the ability to track information with barcoding, technology, exchanging data electronically, and so on. Just some theories to be thinking about. This first one here is the theory of constraints. Just know that it's companies that are continuously trying to improve. Just knowing that in any manufacturing company you have some kind of a constraint. And that constraint is basically whatever is slowing down our process. And it could be the number of machine hours available, or it could be floor space, or it could be a constraint of some resource that we need. Whatever the manufacturing company is, there's going to be a constraint. And so it says basically that theory of constraints is continuously trying to improve our activities, even in manufacturing, non-manufacturing, to try to ease those constraints and work around them or become more efficient in how we work through constraints that we have. Just-in-time manufacturing, also called JIT, just-in-time, basically says let's only make a product as soon as it's needed. So instead of manufacturing a product and waiting for demand and storing that product in a warehouse and spending a lot of resources to build it, hoping it will sell, instead we're not going to build anything until we know it's needed, and we're going to produce it right before we're able to sell it. So we only produce something as it's demanded. And so it's basically a way to become more efficient for a business. And it's only with new technology over the last few decades that's really allowed that to happen. And so manufacturing has become much more efficient and much more lean. So basically manufacturing companies are continuously implementing advancements to try to become more efficient, reduce waste, and try to be as low cost to produce our good and still maintain a certain quality, of course, as possible. And then automation, of course, has become a very big deal, using robotics, using sophisticated software, and trying to reduce the amount of inventory we have to hold on to, while at the same time trying to increase capacity, improve quality, and increase output. So Technology has really been driving some of these things over the last few years. Customer orientation, basically just know that in cost accounting, we're going to talk about the value chain a little bit, and basically all the things that need to happen in a process to design, develop, produce, market, and then deliver a product, which includes goods and services to our customers. And of course, we want to make sure that the customer is perceiving a value in whatever it is we're selling to them. Also, obviously as consumers, we're continuously expecting everything to be better, to be new and improved. Just think about smartphones and computer technology and tablet computers. Every year we expect this technology to be better. We expect it to be higher quality and lower cost than it was the year before. And so obviously manufacturers know that, and so they're continuously developing those new products, new designs, trying to meet customer demand, trying to upstage the competition to deliver a better product at a faster rate than the competition is. So just some procedures regarding that. Target costing, basically trying to figure out from a management perspective to assess the overall cost impact of designs over the product's life cycle. So basically just thinking as a product is introduced and think about what future versions there will be of that product, how do we cost for that? Activity-based management identifies activities produced at each stage in the development process and assesses their costs. So basically, what activities need to happen to produce a good or service, and what will that cost be through each activity throughout the value chain of producing a good or service and delivering it to our customers. And this is kind of just some general stuff here that we'll get into more detail as we move through some of the chapters. So, we're kind of just touching on a lot of things here, big picture, but just know we'll dive deeper in future chapters with some of these concepts. TQM, called Total Quality Management. Again, just that overall idea that we have to continuously be improving efficiencies, that we have to do everything possible to make sure that the quality of the goods and services that we are delivering continuously get better, and so that we can again become more efficient, eliminate waste, and hopefully as we become more efficient in delivering our goods and services, we can do so at a reduced price and higher quality than the competition. So it's just some other factors affecting cost management. Time, right? Obviously, if I can deliver new goods and services to market faster than my competition, obviously a good thing. And so if I can eliminate non-value added items that are in my value chain and decrease the time it takes for some of those things, then I improve quality. I can increase the quickness of getting new products to market. Of course, efficiency, we know what that is. And cost management plays a crucial role in becoming more efficient in delivering goods and services to our customers. Line and staff positions, just kind of be aware of those. Line positions basically have direct responsibility for basic objectives of an organization, whereas a staff position are more supportive in nature and have more indirect responsibility for whatever the organization's basic objectives are. So line and staff, make sure you understand the difference between those. The controller of a company, typically the top person or near the top person for a business in terms of the accounting department, typically are supervising all departments. They play an integral role in efficiency in the company, knowing what it costs to manufacture and deliver goods and services to customers, but they're involved in planning. Planning is kind of just thinking about the future, what are the future activities that the business will undertake. Controlling, are we doing things the right way? Do we have good internal controls? Are we being efficient? And of course, making decisions. And quite often is responsible for both internal, which is more of the management accounting side, and external, which is more the financial accounting side. The treasurer of a company is typically more involved with finance. They're more concerned with cash management. Um, where's our cash come from? Where does our cash go? Making sure that we've got good relationships with our banks. If we need loans, that we have good, we can work through those with our banks, managing those relationships. Also managing any invested assets that we have. If the company has bonds or stocks, typically the treasurer is overseeing that function, and also maintaining relationships with investors. And then quite often is also involved with credit decisions. What credit do we allow our customers? And then collecting on past due accounts or current accounts, and also making sure the company is insured. So just for a manufacturing company, here's a sample organizational chart. Obviously, there's many variations of this, but this is kind of a very um, basic one. But the left-hand side is more the line side. So think of the line function where it's people who are working on achieving the company's goals directly. So if it's a manufacturing company, those are the people involved with making the good, making whatever product that we're manufacturing, and making sure that is delivered to customer hands, efficiently, of high quality, and so on. So it's more the production side. Then you have the staff side, which we're going to focus on the accounting side of that, on the staff side. So you've got a financial vice president, sometimes called a chief financial officer, a CFO. And you have a controller, you have a treasurer, and you have many departments beneath them: internal audit, a cost accounting department, a financial accounting department, an accounting systems area, and a tax department. So those are very common departments to have in a fairly large corporation. And so for the management accountant and that function specifically within accounting, it says to provide information for planning, controlling, continuous improvement, and decision making. Okay, so we're just making sure the company has all the information they need to do these things. So planning is basically what will the future look like as the company goes through the process of deciding what their future objectives will be and how to accomplish those objectives. Accounting needs to be a part of that. Controlling is just basically monitoring your day-to-day activities and just basically internal controls, making sure that as activity is happening, that we are monitoring what's happening right now in terms of current accounting. How close are we to achieving the goals that have been set for us this year? Producing reports saying there's variances with some of the numbers, and then taking corrective action to try to correct that. So quite often the controlling function is you're comparing actual numbers to budget numbers, you're looking at internal control reports, you're just monitoring day-to-day activities, and as we're veering off course potentially, or we're not achieving our goals, you report that, and then management can take action to try to right the ship or turn us towards more achieving those goals. And then of course we use feedback. So you produce reports saying we are meeting our goals or we're not meeting our goals, and then management makes decisions based on that. The role of the management accountant, again, just to continuous improvement, and it says there the relentless pursuit of improvement. For a manufacturer, that's a very big deal, right? Because being efficient can be a competitive advantage. If you are more efficient and can continuously improve in that efficiency better than your competition, there's a good chance that you can deliver a product of high quality, but maybe at a lower cost than your competition, and therefore maybe gain more customers. So that's always a big deal. And of course, decision making, making sure that as management needs to make decisions about whatever it is, that they have the data needed to choose among competing alternatives. There's always choices, right? And we want to make sure that as management accountants, that management has the proper information to make the right choice based on the alternatives presented. Ethics is a very big deal in accounting, and I really believe ethics is a big deal in the MBA program as a whole. And you'll be getting to a future class that's going to focus more on ethics specifically. But ethics should be a part of every class to a certain degree. Obviously, there are tremendous benefits of acting ethically in a business. And number one is treating your customers right. And of course, if you treat your employees right and your customers right, you build loyalty. And by default, by building loyalty, you're gaining customers and maybe willing to spend a little bit more for your product or your service than somebody else's because they know they've been treated right. And of course, hopefully, we'd avoid some litigation costs by being ethical, doing the right thing, not necessarily choosing the decision that's going to save us the most money, but at least making the decision that we believe is the most ethical. And so that's an important part of accounting. Management accountants have a code of conduct, and you can see what some of those items are in terms of maintaining a good code of conduct, being competent, confidential, having integrity, credibility, and resolving ethical conflicts a certain way. There's many certifications in accounting. We're going to talk a little bit more about the CMA here, Certified Management Accountant. Somebody who has a CMA, basically a management accountant, recognized and professional discipline. So somebody who's a CMA basically has passed a test. Of course, you have to have so many hours in accounting and business. You have to have a bachelor's degree in accounting at a minimum, and then you basically are saying, I know about management accounting. It's basically that proof that I know the topic. CPA is for those who practice public accounting. Now, of course, many CPAs can be working in private industry or for manufacturing companies also. And a CIA, Certificate of Internal Audit, basically is recognized as competency in internal auditing. So just know that with kind of the three big categories of accounting here, management accounting, financial accounting, and internal audit, there's a certificate for each one that once somebody has achieved that, it basically just says, I know this material. Well, for this chapter and every chapter, just some good things to do besides read your chapter in the book, listen to the information I'm recording about it, but also it's good to go through some of the questions at the end of each chapter. And for chapter 1, if you go towards the end of the chapter, there's a series of questions, and I'll be using some of those questions in future WebExes when we meet and we'll talk about just some information about the chapter. I will also post the answers to those questions too, just so you can kind of look at those and help you review. There's also a number of key terms towards the end of the chapter, just some of the things we've been talking about. So every week for every chapter there's going to be a quiz. So the quiz is going to be 10 questions and mostly true false, but going to be more terminology based with those. And there'll be some problems to work on in Cengage now. And those problems, sometimes they're not number based, but the majority of them will be more quantitative. We're going to be crunching some numbers, basically be given a set of information, and then basically working through the problems to get the answer. Some are more terminology based though too, and some are maybe a little bit more matching, or you've got a description of something with maybe 3 choices of what that might be. It'd be kind of more of a fill in the blank type of a thing. So you have a few different kinds of questions. For chapter 1, there really is more qualitative type questions and not really any quantitative type questions. But anyway, just some things to think about as you work the material and do your studies every week.